So good evening, students. We will just wait for a few more, maybe a minute or two for some of the other students to come in. But in the meanwhile, I'll just introduce you to who I am. I am Rajveer. I teach MBA students finance-related subject here. So particularly the stock market-related subjects. Yeah. My prior experiences, I'm a chemical engineer from NIT. Then I migrated into finance. Actually ended up working in the US. I was in the US for about 11 years. I worked in a hedge fund industry in the US as a chemical engineer. And then I changed my line into finance permanently. When I came back to India, I was not able to get a job because I was a chemical engineer with finance experience. So I went to the UK, got an MBA, and then entered the asset management space in India, and later on moved into teaching when the recession of 2008 came. Okay, so that's a bit about me. So what I am going to try and do in this session is give you guys a basic understanding of the stock market, right? All of you are able to hear me?
Yes, yes.
Yes,
Okay.
sir.
Yes, sir.
Okay,
Yes,
great.
Yes, sir.
Now, what do you guys know about the stock market? You all heard about it?
Yeah.
Yeah, so what do you know?
The purchase and sale of the stock.
Yes, you've heard.
Purchase and sale of shares.
Yeah. Anything else? Okay, please understand the stock market is one of the few places where you can actually generate returns that beat inflation. Today, if you look in the bank, you're getting about 4 to 5% max on 1 year deposits, right? But the inflation in India, anybody know what the inflation in India is? It's about 5.5%. So if you look at consumer price inflation, you're looking at 5.5%. So if you keep your money just in the bank in the short run, even if you keep your money for 5-year period, you're not getting more than 6%. So inflation adjusted returns are very, very, very less. So the stock market is one of the few places where you can actually beat inflation. Yes. And any of you heard about the stock market indices in India? You've heard about Sensex and Nifty?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Okay, very good. So what is the value of the Sensex today? Any idea?
49 something, 49,000.
Yeah, nearly close to 49,000. Yeah, right. But where was the Sensex when it started? When did it start? Any idea? Which year did the Sensex start? Back in which year? So 1978, 79. Any idea what the starting value the Sensex had back in 1978, 79? What was the starting value of the Sensex back in 1978, 79? Any guesses?
100.
Yeah, very correct. 100. So from 100 in 1978, 79, over a 40-year period, 42 years, we have come to 50,000. How much does that work out on an annual basis? What kind of returns are you getting? So that works out to about 14.5% nearly. Okay. So there's one more index which we'll look at in a bit more in detail. Yeah. What is that index called? Nifty. Heard of Nifty, everybody?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Okay. So Nifty, what is Nifty's value today?
Around 15,000.
Yeah, around about 14,600. Yeah. So
14,630.
Yeah, so that's the Nifty value right now. You've given me the value right now. Stock market will close in another half an hour. So, but where was the Nifty back in 1994 when it started, around about that time? What was the starting value of the Nifty? Any idea? $1,000. Okay, so from 1,000, Nifty has come to 15,000 in about 25 years' time, right? So that again works out to about 14.5% to 15% a year, maybe 16% a year, slightly. Yes. So the stock market is definitely the place that you must all be involved with for the long run, right? In the short run, it can go up, it can go down, but in the long run, it has this tendency to go up over time. Yes. So let us look. So we talked about the Nifty. Yes. So this is NSE, a National Stock Exchange of India. There's another BSE, which is the Bombay Stock Exchange, right? So NSE computes the Nifty index. So what is the difference between Sensex and Nifty? Anybody know?
So Nifty 50 is the top 50 companies of India in the stock market.
Yeah.
And
Correct. So Nifty has about 50, India's 50 largest companies. And the ideal thing about a stock market index is that it has to represent the economy. So how many different sectors are represented in Nifty? Any idea?
sectors.
Almost 21 sectors represent. So it's a wide representation. And you can see today, Nifty is not having a good day. It is down quite a bit. Yes. So let us look at what companies are in the Nifty. Okay. So you will go to indices here on the NSE website. Are you able to see my screen?
Yes, sir.
Yes, sir.
Okay. So please understand, Nifty is not the only index. If you look down, there are many indices. So there is Nifty Next 50, the next 50 stocks after the Nifty 100 largest stocks in the Nifty. So these are all stock market indices. So by the way, why do we need a stock market index? Any thoughts as to why should we have an index?
So we can compare the progress or the recession, I guess.
You are very correct. So one of the things is that how do I know that India's doing well? India's economy and the companies in India are doing well. And how can I just use Reliance or one company? It wouldn't be very accurate. So I want to know how the economy is progressing and how the companies are performing on a broader scale. So hence, stock market index is thought to reflect the performance of the economy at large. And so we will have to have a broader index which represents many sectors. Okay. So that's why we have a stock market index. The second major reason why we have a stock market index is that we need a benchmark. How can I say I'm making good returns or bad returns? Only if I have a benchmark to compare. So stock market, so sometimes you may think that 10% returns is a very good return. But if the Nifty has made 20% in that time, your return is actually not a good return. You have not beaten the stock market index. And you've heard of these things called mutual funds?
yes, sir.
Yeah, so mutual funds benchmark their performance against broader stock market indices like the Nifty. How do I know my mutual fund is doing well? Is it beating the performance of a stock market index like the Nifty? That is something I need to look at. So now let us look at what is in the Nifty 50. Remember, 50 companies are there. There we go. So as you can see, let us see. There used to be a performance metric. Anyway, you can see that, oh yeah, percentage change is there. So you can see today, the Nifty is down almost 2% today. And you can see which companies are leading, which companies are lagging, right? So today, if you look, most of the IT companies are the ones which are holding the index up. You can see HCL Tech, IT and FMCG are holding the index up. Yes. You know all these companies that I'm showing you? These are the 50 companies which are in the Nifty. So you can look at many of the top IT companies are all there. So you can see the green is where the companies are actually performing well today. If you look at IT and FMCG sector and steel sector seems to be leading. Yes, let us go down and see the banks are doing very poorly today. They are the drag on the index. Yes. Yes, you can see banks, cement maybe. Yeah. Automotive companies, chemical companies, industrial companies, they're all down today. And banks are the biggest laggards. And which company is down quite a bit today? The NBFCs and the private sector banks are not doing very well today. They are all down much more than the market index. So as you can see, so these are the companies that are in the Nifty 50. Yes. And some of these companies have been in the index for a long time, over 20 years time, like Infosys, TCS, and they have all given much higher returns than the index. So on a day like today, why are the IT companies doing well? This is something that we must look and try to understand. Any ideas, guys, why the IT companies are doing very well today?
Because they can operate offline also.
Okay, that's a good way of looking at it. But please understand the IT revenues. Where do the IT companies get revenues from? Are they getting it locally or abroad?
Both.
But most of their revenues are from abroad. Okay, doing banking related work in the US, UK, etc. So when will they benefit really? When the exchange rate goes up, when the rupee depreciates or appreciates?
When rupee will decrease.
Yeah, when rupee will decrease, they will get more rupees for their dollars when they bring them back, right? Yeah. So of late, what has happened is the rupee has suddenly started to depreciate the last 2 days. And also IT companies tend to have stable earnings. So investors are looking at these companies to have much better earnings rather than something companies like banks, which of late, if you have noted globally, interest rates have also gone up, which is not perceived to be very good for financials. So interest rates suddenly go up. If it goes up a little, it helps banks, but if it goes up suddenly, then the bank's cost of funds go up, right? So hence, IT stocks, which get the benefit of the deflating rupee, are beneficiaries of this falling rupee, as it is. The other stocks that are holding up are steel. Many people are looking at short-term growth, but I think steel is bound to get affected in case things slow down. I actually think the economy won't recover much. It's very, very interesting that the economy hasn't recovered all that much post-COVID, but the stock market has recovered, right? So there is actually a disconnect, if you will, between the economy and the stock market. That cannot last. So either the stock market is off late, if you look at the last 2 weeks, the stock market has been coming down about 7%. It has already come down. And my guess is it will come down more because it is going to find out it went up on the hopes that the economy will recover. Corporate profits have started to recover, but they are nowhere near post-COVID levels. And if corporate profits don't recover, then the stock market can go down. Okay. So this is the stock market for you. Now, the question is, yes, how can we make money in the stock market? Any of you guys trade the stock market?
Yes, sir.
Yes. And is it easy or difficult to make money?
More like complex.
So in the very short run, if you do very short-term trading, very, very difficult to make money. Warren Buffett says, yes, be fearful when everybody is greedy and be greedy when everybody is fearful. That is how you can make money. He also says, avoid doing anything close to gambling. Yes, don't engage in derivative trading, this, that. He says, turn off the economy, turn off the stock market. Just do it long term. So long term, you can systematically make money because that's why you all heard of something called an SIP. Any of you heard of SIP?
Yes, sir.
Yes, sir.
Investment plan.
Yeah, so SIP is called a systematic investment plan. In fact, I encourage each one of you to open an SIP. The government will do it for you with a tax benefit if you open an NPS, but you can do it yourself. In fact, you should never time the market. Every time I've timed the market, I've only lost money, and I've lost quite a bit trying to time the market. You cannot. Even if you're a trader, getting in at the exact top and bottom should not be your goal. You should catch hold of a trend. So for this, I will show you a Nifty graph. So this is the technical graph of the Nifty. So we'll see that. So the question is, yes, long term we can make money. Can we make money in the short term? So let's have a look.
We do.
Okay, so this is the Nifty graph over the very short term. Yes. I'm going to go show you. So this is a one-day graph on a Nifty. Yes. I'm going to shift this chart. I'm going to shift this chart to a weekly or a monthly pattern, and then you'll see the COVID effect. Okay. So this right here was when the market peaked and then crashed COVID, and then it recovered vertically. Yes. But when the market recovers this vertically, it usually cannot sustain at much higher levels. So that is a long term. So now Warren Buffett says, be fearful when everyone is greedy. So here, greed. Here, greed. Right? Probably we are getting to a stage where there's greed. And that's probably why the market is going down. But here there was fear during COVID. This is when you should have bought. Yes. What about on a day-to-day basis? Is it easy to make money doing that? So I'm going to show you a strategy. So if you have investing.com, let me send you this link. Market will close soon, so let's see what you can. I don't seem to see the chat window. There it is. Okay, you can pull this up. All of you got that message in the chat?
Yes.
Yeah. So I'm going to use a moving average strategy. Now, there are few things, two aspects of stock trading that you must be aware of. One is fundamentals. Fundamentals are based on how profitable a company is. So some of you who have finance backgrounds, who have taken BBM, BBA may have been introduced to a concept called EPS, earnings per share. Yes. So that is nothing but the net income divided by the number of shares outstanding for a company. So that is earnings per share. So as it goes up, as the company becomes more and more profitable, the share price also goes up. But this is more long term. In the short term, there is something called technical analysis. So we are going to click that graph indicator and put MA there, and you will get MA cross. Okay. So this is a short-term trading strategy. Okay, I am going to make a rule. So here what you see is a short-term moving average called the 9-day moving average. So the 9-day moving average is nothing but the last 9 days average of the stock price. In this case, the Nifty's price. Okay. Okay, so that's the red line. The 26-day moving average is the green line. So I'm just going to make a rule. This is a 1 hour chart. Click 1 hour, short term. Every time the short term moving average crosses below a long term moving average, sell signal. So today there was a sell signal right here. Yes. So that is where we sell. If it was like this, where the short term moving average crosses the long term moving average, then there is a buy signal. So we will be buying. So very, very simple strategy. And so right now, what would you do? You would probably sell it because the short-term moving average has crossed below the long-term. A moving average is simply the last few days average. So the 26-day moving average is nothing but the last 26 days average of the price. Okay. So you have to look at the short-term trend and you should trade within the trend. There is a very famous saying in trading. It goes something like this. The trend is your friend till it ends. Yes, the trend is your friend till it ends. So here, the trend is up. So you want to buy when the moving average crosses. Yeah, so the rule of thumb is, when do you get out? When you make 1 or 2% profit, if you're doing short term, that's a good enough way to get out. Yes. Similarly, the trend looks like it's changing. So be ready. So when the red line crosses below the green line here, this is just the hourly chart. So like this, you can do very short-term trading. Yes. Yes. Okay. Any questions? Now, please note, every graph doesn't look the same. Let me look at a few graphs for you together. Let's look at Maruti here. It's a classic case where the trend is actually turned down in a big way. Look at that. So if you had sold Maruti here when that red line crossed here, you would have made quite a bit of money. From 7,100. It went all the way to 6,700, almost 400 points. 7% move it has given down. So this is an example of a trend which is breaking down. Yes. But if you look at Infosys, for example, this trend is very different, or for that matter, TCS. Have a look at this trend. How does this trend look? So this is uptrend, right? Can you see the trend that is up?
Yeah.
Clear uptrend. Yes. Maruti was down. This was up. What about this? Just changing to it. Was up the last few days, but now changing down. Good time to probably sell it. Yes, red line crossing below the move. So remember, if you're trading short term, you have to take quick profits. The trend can change every 2-3 hours. So once you are in a trade and you are profitable, decide on your objective, maybe 2-3% move, you can get out. So from here, 1380, if you went long, around 1400, 2% up, you get out. And similarly, it has started coming down. Let's say you sold at 14.7. So maybe when it goes to 1380, this low is where you should be targeting. It should certainly most likely come to this low of 1380 or so, and then we can take it from there. So that is how you do trading in the short term. You should be very disciplined. Also, you should use something called a stop loss, right? So what if you are wrong? So in here, you are thinking it is going, it may start to go up, and let's say you bought it, but you should put a stop loss somewhere here. A stop loss protects you in the event you are wrong. So you are thinking it may change trend and you went to buy here, but you put a stop loss near 1388. So as soon as 1388 comes, you will be out of the trade. Then you can reposition yourself. So when you're doing short-term trading, it's very, very important that you manage risk. Yes, that is very, very, very important. Okay. Okay. Now, any questions on anything other than this? So the question should come as to how these great trade people like Warren Buffett, you've heard. Yes. How do they make money consistently? See, they never do this short-term stuff. They're only doing long-term. And right now, Warren Buffett has not bought a lot of stuff, but he is positioning himself for when the market crashes. Post-COVID, when the market crashed, he was loading up on stuff. So his policy, as I said, be greedy when everybody is fearful and be fearful when everybody is greedy. That's how Warren Buffett makes money in the long run. Yes? Okay. So before the market close, let's look at what any companies come to mind. Let's look at the banks today and the NBFCs. So HDFC is one of those. Again, showing all kinds of signs of breakdown. After recently going as high as 2600, gave a sell signal and started to break down. So today is an interesting day in the sense that most of the global big markets are all up today, but only Indian market is down. So what is causing that? Yes. So sometimes news related events may be lined up in the week. Anyone know what is happening this week that is relevant to the Indian market?
The lockdown news in several states.
What now?
The lockdown news is
Yeah, so Mumbai, several parts of Mumbai are probably going to be under lockdown. COVID cases are rising like anything the last few days. So as a result, there is some worry that we may be forced to go into another lockdown. And if that happens, the economy will tank and stocks could tank again. Yes. Please note, the stock market actually is a discounting mechanism. It will actually go up in anticipation of what is going to happen in the economy. So in early February last year, end of February last year, 2020, when COVID was coming, it started crashing because it knew that economy was going to crash. But even before COVID cases were still going up, the market started going up because it was expecting a short-term recovery. So now if it crashes again, it is probably expecting another crash. My view is long-term, everything is okay, but the short-term, the next 5 years is not going to be very good for stock market returns because there's a lot of risk in the system and we may be potentially entering a very deflationary environment, right? Where growth does not happen. Yes. You all know the difference between inflation and deflation. And if you do, tell me which is more dangerous, inflation or deflation? Okay, that brings me to what I was talking about a few minutes ago. So I was asking you, what is something important that is going to happen this week? One thing that is going to happen is the Reserve Bank of India meeting, central bank meeting. So the question is, the stock market is probably thinking maybe it needs some support from monetary policy. Maybe the RBI should cut rates. Do you think the RBI should cut rates? By the way, you all know monetary policy is one of the big drivers of stock market and stock indexes and pricing. Why is that? Because if interest rates go up, then as you know, banks have to pay, companies have to pay a lot more interest expense on their loans. So as a result, profitability will come down. On the other hand, when interest rates go down, companies can borrow cheap, pay less interest expense, and be more profitable. So that's just a very fundamental way of looking at how interest rates influence stock prices, right? So that is something that you have to keep an eye on. So far, RBI has kept interest rates very low, right? Do you think they will cut interest rates this meeting? What do you think? Go ahead. Somebody said something. This is an interactive session. Please stop me anytime. We can go back and look at anything. Yes, somebody asked something.
Sir, I have a question.
Go ahead.
Sir, in last few days, we have heard the news that government banks are getting privatized. Sir, how will it affect the stock market?
I think privatization is a good thing for stock prices, because government banks are not run very efficiently, right? So if they are privatized, then they could but government banks do have very big customer bases. So whoever is buying them could run them more efficiently. But then again, all private banks are not created equally. Some private banks, such as Yes Bank, have not done very well. Yes, they have
Yes, sir.
taken.
My next question is that only.
Yeah.
We have seen that the Yes Bank stock get crashed very badly, that it couldn't recover last 1 year also. Then how the privatization
Okay.
will be
So
good
so
on
the
the stock?
so the thing is, who are the buyers, right? So if you look today, the banks, the private sector banks that are doing really well are the ones like HDFC and Kotak. Why is that? Their non-performing assets are very, very less. Okay, they control their asset quality is very, very good. Meaning they manage their non-performing loans. Meaning if somebody is not paying back, they try to take and recover those loans as quickly as possible, and they have better control measures when they lend. But public sector banks have to lend to all the segments like farming, priority segments like agriculture, etc. As a result, their NPAs, yes, they have tended to increase over time. But the banking system on a whole is not as strong as it was 10 years ago, because these NPAs or non-performing assets have increased from $500 billion to about 13 to 14 trillion today. So that is another reason, if another crisis comes, we will be in trouble. So to answer your question, not all banks are created equal, right? So some of the private banks like Yes Bank took a lot of risk. They lent left and right to segments which couldn't repay. And as a result, they are struggling even now. Another
So
bank, yeah.
So if we analyze current situation of Yes Bank, will it rise again as it was in the back?
So Yes Bank has been bailed out by investors led by SBI. So if SBI completely takes over Yes Bank and brings it into its thing, which I don't think may happen immediately, then its shares can rise if it becomes part of SBI. On a standalone company basis, I don't think it can do, because it's still stuck with a lot of bad loans. Good question. Any other questions, students?
And so one more question.
Yeah, any number, go ahead.
So as I trade frequently, sir, I've seen that right now the market of the power companies, the power supplying companies are getting priced. Will that be a future for next 2 or 3 years for the power companies in the stock market? Will it rise? Because one of the example is Adani Power.
Okay.
Yes, sir. That is
So
rising quite frequently, And
Yeah. So remember, these power stocks tend to be very volatile. These Adani group of companies are perceived to have a favorable political environment right now. Okay. So as a result, many of them, since Prime Minister Modi took over in 2014, if you look at the Adani power graph, it is vertically up. Okay. Okay. Since the
Yes, that's what
BJP.
yes, sir, that's
So,
what I realized.
so that environment remains. But also during this period, the stock market has also gone. So if this, one of the things you have to note is the Adani group stocks tend to be more volatile than the market itself, which means they're a bit more risky.
Yes, sir. Like Tesla.
Correct. So of late, if you look, the interest rate environment, both in India and in the US, interest rates have gone up. Interest rates, when they go up, it's not a good idea to buy higher risky stocks. They will usually fall. So I think if interest rates continue to go up or risk markets become more risky and start to come down, like the stock market itself has come down, these stocks can't continue going up. They may fall more than the market if there is a sustained downtrend. So you have to be careful with them. Always use a stop loss. Yeah.
But sir, can we say that the renewable energy, these companies are the future? Like Tata Power has also initiated in the stock market. We have seen the inflation in the Tata Power stocks also.
Yeah, see, renewable energy is definitely the way to go. I have no doubt about it. But how much of that good news is already in the price is anybody's guess, right? Sometimes, remember, the stock market works on buy on the rumors, sell on the fact. So in anticipation of some favorable news, the stock prices actually go up, and in the end, they sell off. So let us look at that graph since you brought it up. Adani Power, this one, let's see. Yes, see how volatile this is? From 107, it crashed to about 82 and now has bounced back. I think it's going to give another crash again. But if you look at the long run, if I look at the monthly graph, this is very interesting. Yes, the monthly graph has made recent highs. From almost 20,
Yes, sir.
nearly 30 rupees post-COVID, it has tripled in value. I wouldn't buy here, definitely, because I think the overall market can crash quite a bit. And high beta stocks like this will come down very easily.
And so one more Tata Power also I want to.
Again, I'm very sure it's a similar looking graph. Let's see. There you go, already about to cross to the downside. Again, non-stop rally. If you look at the 1 month graph,
Yes, sir. It's
same
actually
kind of graph. Yes, all the power stocks looks like this.
Yes,
But there's some utility companies which are, I think, better to look at. But even then, you have to. The CESE is one company that I track, and this again, it is given sell signal now, but long term, a bit more stable. And another company called Power Grid. These are all good long-term stocks. You want to ideally buy them when the market keeps coming down. These are Power Grid. Yeah. So this company has stable dividends. It's a government enterprise, and does a lot of fundamentally sound company. So this is the type of so long term. So you should have a plan. The SIP will always work long term. The short run, use the chart to trade.
So what do you say about the Tata Power? Is it safe for the long run?
So you should decide what you want, right? In the short run, it looks like it's going to crash. In the long run, probably will do well. But long run is, so here's the long run means you should be willing to hold for 10 years maybe, because I don't see the stock market going up in the next 5 years. I think the stock market will be stuck in a range and most likely drift downwards for the next 5 years, after which it will go up, I'm very sure. But in that time, you should do monthly investments. Okay, students, let me add. So this is the basic moving average strategy. So if you want a slightly enhanced moving average technical strategy, the Japanese investor traders came up with this idea called Ichimoku clouds. Okay, I'll re-mention it to you, Ichimoku clouds. So I'm just going to add one of those. You'll see how interesting this indicator is, because it doesn't tell you when the top or bottom is, but it makes you on the right side of the trade. So I'll just add this. There we go. So when this indicator, you see, it's a combination of moving averages. Yes. MA cross, I will close so that it doesn't overlap. So you can see, so when this indicator turns green, you want to be buying. So you can see it turned green somewhere here. You can capture most of the up move in this. So when this indicator turns red, you want to sell. Okay. So let us look at a company. So if you look at, this is the monthly graph. I'll just switch to the daily. You can see this. So when the indicator is green, you want to buy. So here it is green, still green. So this is buy signal, right? Power grid. So how about your Tata Power? So green so far. The moment it turns red, like this chart, see here, it's become red, you see? Do you see it?
Yes, sir.
Yeah, so once it turns red, so Maruti is in sell mode. So it won't tell you exactly where the top or bottom is, but it will help you be the right. So in case if I want to do something with Maruti, I'd be selling, not buying. But have a look at TCS.
It's already at its peak, sir, I guess.
So if you look at TCS, still green, right? Still green. Lnt about to turn red, I believe. Green still, but not by much. Still green only. Yes. Okay. So there's something else the Japanese invented called candlesticks. So the red bars are prices. When prices go down, you have red bars, green bar. So that people use that also to make investment decisions. I don't do that much. I just use the cloud indicators and moving average crossovers as technical tools. Okay, somebody's asked me about Lnt Infotech. Let's look. Okay. I don't know what the name here is. Don't know. Here. There you go. So far showing bullish price action. Has gone quite a bit up actually. Okay, One of the important things aside of looking at graph for the short term, long-term investors look at some ratios. Okay. As I told you, there is something called the P ratio. Yes. Have any of you heard about the P ratio?
So actually, sir, I don't remember the full form of P ratio, but I guess when we invest, that we should look the company's P ratio. It should be it is safe to invest when the P ratio is about to 10 or below 10.
Yeah. So P ratio is nothing but the price to earnings ratio. Okay. So how do I calculate that? Price to earnings, meaning price per share divided by earnings per share. So people like Warren Buffett typically starts looking at selling everything if the P ratio is greater than 25 or so. And they will buy when the P ratio is below 10. What is the logic behind doing this? Okay. So right now, India's Nifty index, anybody guess what the P ratio is? If you go on my website, I have put it there. But can anybody guess what the P ratio of the Nifty index is? Remember, individual stocks have P ratios, so do index also. So the P ratio of the Nifty is 33. It was nearly 40 at the high, right? So very, very expensive. So what does it mean when you say P ratio is high, 33? So invert the P ratio, 33, and express it as a percentage. So P is 33, means E by P into 100 if you take. So 1 by 33 into 100 is 3%. Now there is something called the dividend yield, meaning the dividend paid by the Nifty companies. That is about 1.3%. So add the two together, you get 4.3%. So it means if I buy the Nifty now, I'm only going to get 4.3% return effectively the next year. Is that good or bad? What do you think? Is that good? It is not, because I can just keep my money in the bank and get 4.5%, right? So why should I take risk and buy stocks at these levels when I can get more money in the bank without taking any risk? So that is why when PE ratios become high, the market becomes overvalued. And when PE ratios decline below 10, the market becomes undervalued. Now, please note, this is not a general rule. Different industries have different PE ratios. For example, IT industries, where the growth is very high, have high PE ratios. Tech industries, which have high PE ratios now. But you will see companies like steel, etc., or the public sector banks have low PE ratio. Okay, so it is all a question of sector. So there is a rule of thumb which goes something like this. The PE, if you want to buy a good company, buy below a PE of 15. There's a great investor called Benjamin Graham. He says buy when the PE ratio is below. He was Warren Buffett's guru and teacher. Okay, so he says buy below PE ratio of 15. And you can add something to it. You can add Warren Buffett's methodology. Yes. Buy when the PE is below the PE of the industry. Yes. So let us look at some companies here. Buy when the PE ratio is below the PE of the industry. Buy when the PE ratio is also below 15. Yes. Also, buy these companies, add one more condition, that the ROE should be greater than the ROE of the industry. So if you have these conditions on a fundamental basis, this is a good way to select companies for the long run, not short run, but long run. So this is what great investors like Warren Buffett do. They do long term, not the graph. They don't look at the graph. So I'll go to money control. So I look at SBI here. So if you go down, here are some stats for you, and you just scroll down this, you will come to, you see the stats? Yes? What is the PE ratio? Can you see the PE ratio of SBI anywhere? What does it say? 13.61. TTM. TTM stands for trailing 12 months. So if you look at SBI, the sector, the PE of the entire banking sector is 26, but SBI is only 13. So that is probably a good buy. But provided ROE of SBI should also be greater than the ROE of the sector. So if you apply logic like this, you can fundamentally identify good companies. TTM is trailing 12 months, the last 12 months. Always use the last 12 months. Yes? So fundamentally, that's a good way to go about. So if SBI pulls back on weakness long term, that's probably a good buy. SBI was nearly 120 or something post-COVID. It has almost tripled in value. Yes? Also, you see something called the beta. Ideally, you want to buy companies with low beta. Beta means, beta 1.3 means what? It is more riskier than the market. So if the market falls 10%, SBI will fall 1.3 into 10 or 13%. So today, the Nifty fell, I think, 1.5%, but you can see SBI fell nearly 4.5%. So it is more risky than the market. Ideally, you also want to buy companies which are less risky compared to the market, but it's very difficult to find things with all those conditions being satisfied. But good investors, stock pickers, tend to involve 2 or 3 conditions, and then they stick with it and they identify good companies to it.
So, I have a question.
Go ahead.
So, as we see these companies and these banks, the stock prices of these banks or these companies are around 2,000 or 3,000. But how can we analyze the companies, the giant companies like MRF, which the first stock price is 81,000 around?
Yeah.
Today.
So remember, you should not look only at the price. You should look at the valuation. That's why the PE ratio is more important. So for example, let me bring up that same company you talked about, MRF.
Yes, sir, because last 2 or 3 days, the stock price was 72,000 or something. Today it closes at 81,000. So
MRF is one company which has not split its shares at all. So if you look, so the question is whether we buy MRF. MRF has good ROE, very good ROE. But have a look. Let's look. Today it is 81,520.
And so how these companies affect the stock market?
So MRF is a mid-cap, in the mid-cap index, I think. You look at the PE, it's still below the sector PE. So while in price terms it is expensive, on a valuation basis it is not expensive. So you should never look at only the price. You should look at the valuation. So the PE is below the PE of the industry, right? Sector PE is 26, 25.98. But the PE of this company is 21.29.
So how these companies stocks prices go such higher than other?
No, sometimes companies don't split their shares. So when prices go up, companies, to make it affordable for individual investors, they will issue bonus, split their shares. This is one of those companies that has not done it. It doesn't mean it is expensive. That is what you have to make a difference. You should just not look at the price. You should look at the valuation.
And so in India, the Reliance industry is one of the giants in the stock market. And so how can we compare the MRF and Reliance?
They are different industries, right? You can't really compare them.
Okay. But
you have to compare. Yeah, you have to compare within the industry.
Okay.
MRF is a tire making company. Reliance is an oil producing company, right? Primary businesses, if you look at that. So they are two different.
So that's how we can
You should compare always within the sector first.
within the sector. Okay.
Yeah.
Thank you, sir.
Anyway, when you come to third semester and you guys all, whoever wants to take finance, we'll do a lot of things, live simulation, etc. for you guys in class. So it's going to be fun. Okay, students, any questions?
So, can I ask you?
Go ahead.
So, as we can see, the last year, Vodafone and Idea got merged.
Yeah.
So they come under the top 10 telecom companies in the world, not in India. They are the top 10 companies. Still, the stock prices are quite stable at 10 rupees or 8 rupees around. Their stocks get stable. How
So-
is it so?
So the thing is, you should always stick with the leaders in each sector. So in the leaders in the telecom are Bharti Airtel and Jio. And once Jio came into the market, it pretty much killed a lot of the competition. Many people switched out of other providers to Jio. So Idea is one of those struggling companies. So
Still, sir,
that,
VI has a pretty large customer base. It has around 258 million customers. That comes.
but of late they have not been that profitable compared to Jio or Bharti Airtel.
Okay. Still, sir, I've seen that the individual in the global, the Vodafone is at seventh or eighth position, and the VI was at fifth position, surprisingly.
But not in India, right? So that's all that matters. They may be a leading player outside, but not in India.
Thank you, sir.
Yeah. Okay, students, any other questions? If not, I'm just going to end it. You can send me follow-up questions. My number you can note in case I'll send you. You already have my website. I will send you my number. You can WhatsApp me any questions, queries, discussion. There you go. All of you have that number? So my idea was to just introduce to you guys to the stock market and hope it was useful. And sorry. So since we don't have much time and it was just a 1 hour session, any further discussions we can continue on WhatsApp. Okay, students, any other queries, short queries? I have 2 minutes. I can still take a query. Okay, then. If there are no queries, I'll end it right here. Thank you, students. Bye.
Thank you, sir.
Yeah, somebody had asked a question about book of fundamental analysis. There are many books. There is one very good book called Beating the Street, Peter Lynch. So that's a good book. So Beating the Street, Peter Lynch. Very good book. You must buy it on Amazon and read it. Okay, students, thank you.
Thank you, sir.
Thank you. Thank you, sir.
Thank you, sir.
Thank you.